Good morning, good evening, or good afternoon, wherever you are in the world. The topic on the table today is breaking down what caused Proterra's downfall and whether or not the bottom is in.
Today's video will be broken down into 4 parts, providing a little context, Proterra's Q2 earnings, what caused the recent downfall, and sharing our predictions. You may all be wondering, how much more will Proterra fall, or was this rebound this past week a start to an uptrend? Ever since our last video on Proterra, the price of the stock has fallen over 20%. We had previously stated that Proterra is unlikely to break under NAV net asset value, which is $10, but we were soon incorrect with it declining the past 2 weeks. So where do we think Proterra stock will be heading in the next couple of weeks? Before diving into our predictions, I just want to shed some light on Proterra's latest earnings, as it may have been a factor to the recent stock's downfall. The biggest catalyst that could have caused the recent downfall is the Q2 earnings. So let's dive a little deeper into their financial statements to see if we saw quarter-over-quarter improvement or any potential red flags. Proterra reported record earnings in Q2 of $59 million, up from $42 million in Q2 of 2020. Gross margin was positive for the 6th quarter in a row at 2%, while total operating expenses were $31 million, including $10 million of research and development expenses, focused on battery, vehicle, and software development. However, this was a 34% increase in operating expenses compared to Q2 of 2020. For the 6 months ended of June 30, 2021, Proterra generated $113 million in revenue and gross margins of 2%, which was aligned with their expectations at the start of the year. And they note, as a result, we are reaffirming for 2021 guidance for a total revenue of $246 million, representing an annual growth rate of 25% year over year. We also expect for 2021 gross margin to remain positive. Overall, that statement's extremely positive, as they're reaffirming their for 2021 guidance set back in the beginning of the year, despite the ongoing issues of chip shortages, supply chain difficulties, and logistic difficulties. Therefore, Proterra is continuing to follow through its plan and executing on its growth strategy with increasing revenue. Proterra also goes more in depth in their 2 latest contracts, with Roche Cleantech and Taylor Machine Works. Proterra notes that new partnerships do not typically lead to immediate revenue, but these partnerships can provide better visibility into revenue prospects 2 to 3 years later. With more contracts and partnerships, it opens up for more revenue streams that can positively impact their quarterly and annual revenue, thus increasing the growth of the overall company. In addition, Proterra goes over their growth plans for the future, highlighting that Proterra Transit, Proterra Powered, and Proterra Energy will soon become independent business segments in Q3 of 2021. By creating these separate business segments, Proterra aims to dedicate the resources and build the infrastructure to support the growth of each independent business segment. Proterra wrote, "We expect all of our businesses to benefit from our investing in technology development to refine our capabilities in drivetrain and software, strengthening our vehicle integration services, and expanding our business development activities." With the ample amount of liquidity they have on hand, Proterra is taking advantage by pouring their money into R&D and operations to hopefully accelerate the company's growth.
So if earnings met these expectations and provided a crucial update with Proterra Powered, what caused this downfall? Well, it mostly comes down to the overall SPAC market. Across the board for most SPACs, we see one common trend. Most SPACs are trading below the NAV of $10. In fact, many are trading below one half of that at $5. This is partly due to these companies putting out incredibly unreasonable guidance, only to change it when they go public, thus causing extreme distrust in the entire industry. This, combined with the glut going on in the public markets, is providing a very steep decline across the industry. The companies most affected by this are EV SPACs. Take a look at some of the SPACs in the industry, including Helion, EVgo, and Microvast, just to name a few. We see a pattern in all of these companies, a 50 to 75% drop from their peaks. The market is overcompensating for the SPAC glut by causing an industry decline across the board. However, some of these companies don't deserve to be beat down while others do. In times of distrust, it is important to recognize the opportunity, the companies that are going down that don't necessarily deserve to go down. One of the biggest being Proterra.
Let's quickly dive a little deeper into some technical analysis on Proterra to hopefully find the bottom or how much the stock will continue falling before it finds some support. My technical analysis has been roughly the same for the past couple of weeks, besides updating a few support and resistant lines. But instead of just focusing on support and resistance levels, I want to show you this descending channel once again. In our previous video, I spoke about it, but never thought it would be significant since I thought Proterra wouldn't fall under $10 a share. So let's take a look at the descending channel now. It starts from the beginning of March and stretches all the way to present day. The bottom of the channel acts as support, while the top acts as resistance. As we look closer to Proterra's price action, Proterra successfully broke above it this past trading week, possibly indicating a start to an uptrend. Usually, price action that breaks through a descending price channel is always bullish. And just to show, here's an example of a descending price channel that has price action breaking above the top trend line, leading to bullish price action. We can make a prediction that Proterra will begin to make higher highs and higher lows if it maintains above that descending price channel. However, if it indeed retreats back into it, we may be heading lower, to prices we haven't seen before. And just as a heads up, September tends to be the worst month for equities with a negative average return. So just be aware and cautious about any sharp corrections that could happen in the next couple of weeks, as the SPY and Nasdaq has hit 18 new records in August.
From a fundamental point of view, nothing has changed in Proterra. Proterra has reaffirmed their guidance for 2021, announced new contracts, and more. This means if you were a buyer at $20 all the way down to $10, your mindset should not have changed, and rather you should view this as an opportunity. I take every day as a chance to possibly add more Proterra before the almost inevitable explosion coming in the future. Proterra is a great company, and long term I believe it will win over its competitors in all three of their industries: the battery industry, the electric busing industry, and the electric solutions industry.
Make sure to go check out our Instagram page right over here where we post daily stock market picks and updates.
Make sure to check out our StockTwits Twitter and Discord, all linked in the description below, as well as hit that like button if you enjoyed the video, and hit that juicy red tomato subscribe button, and those post notifications also down below to keep up with our next videos. Other than that, we would really appreciate if you left a comment below telling us what we can improve upon or recommendation for next time. Thank you for watching, and good luck on your investment journey.
Bye.